The rise and fall of NVIDIA in the tech industry. NVIDIA, once a dominant force in the tech industry, particularly in the realm of graphics processing units, GPUs, and AI computing, is now facing significant challenges. Understanding the root causes of NVIDIA's struggles requires a closer look at the factors that have led to its current predicament. The rise to dominance. Pioneering GPU technology, revolutionizing graphics processing. NVIDIA revolutionized the graphics processing industry by introducing its line of GPUs, which became the standard for gaming, professional design, and high-performance computing. Their GPUs provided unparalleled performance, setting the company apart from its competitors and establishing its dominance in the market. Expansion into AI and data centers. Recognizing the potential of GPUs beyond gaming, NVIDIA strategically expanded into AI and data center markets. Their GPUs became the backbone for training AI models, handling massive data sets and supporting complex computations, solidifying their position as a leader in these sectors. Strategic acquisitions and partnerships. Acquiring key technologies. NVIDIA made several strategic acquisitions to enhance its technology portfolio. These acquisitions allowed NVIDIA to integrate new capabilities into its product line, such as AI frameworks, networking technologies, and high-performance computing solutions. Partnerships with industry leaders. NVIDIA formed partnerships with major tech companies, including partnerships with cloud service providers, automotive companies, and research institutions. These collaborations helped NVIDIA expand its reach, enter new markets, and secure a stronghold in emerging technologies. Emerging challenges and market shifts. Increased competition. AMD's resurgence. AMD, a longtime competitor in the GPU market, made a strong comeback with its Radeon series of GPUs, offering competitive performance at lower prices. AMD's resurgence has put pressure on NVIDIA's market share, forcing the company to reevaluate its pricing strategies and product differentiation. Intel's entry into GPUs. Intel's entry into the GPU market with its Xe series added another layer of competition. Intel's established relationships with OEMs and its aggressive marketing strategies have further intensified the competitive landscape, making it difficult for NVIDIA to maintain its market dominance. Supply chain disruptions. Global semiconductor shortage. The global semiconductor shortage has severely impacted NVIDIA's ability to meet demand. The shortage, driven by a combination of increased demand, pandemic-related disruptions, and geopolitical tensions, has led to delays in product launches, increased costs, and limited availability of NVIDIA's GPUs. Manufacturing constraints. NVIDIA relies on third-party manufacturers, such as TSMC, to produce its GPUs. However, manufacturing constraints and capacity limitations at these foundries have hindered NVIDIA's ability to scale production, exacerbating the supply issues and affecting revenue. Market overdependence. Reliance on GPU sales. NVIDIA's revenue heavily depends on GPU sales, particularly in the gaming and data center markets. Any downturn in these markets, whether due to economic factors, shifts in consumer behavior, or technological advancements, poses a significant risk to the company's financial stability. Vulnerability to market cycles. The tech industry is notoriously cyclical, with periods of rapid growth followed by slowdowns. NVIDIA's overdependence on specific markets makes it vulnerable to these cycles, leading to volatility in its financial performance and stock price. Impact of global economic conditions. Inflation and economic slowdown. Rising costs. Global inflation has led to increased costs for components, labor, and logistics, squeezing NVIDIA's profit margins. The company faces challenges in passing these costs on to consumers, especially in a competitive market, which has further strained its financial performance. Decreased consumer spending. Economic slowdowns and uncertainties have led to decreased consumer spending on discretionary items, including gaming hardware. This has directly impacted NVIDIA's sales in the consumer segment, forcing the company to adapt to a more cautious market environment. Geopolitical tensions, trade wars, and tariffs. Geopolitical tensions, particularly between the US and China, have resulted in trade wars and tariffs that impact NVIDIA's supply chain and market access. These challenges have increased operational costs and created uncertainties in key markets, complicating NVIDIA's global strategy. Export restrictions. Export restrictions on advanced technologies, including AI-related hardware, have limited NVIDIA's ability to sell its products in certain regions. These restrictions have not only reduced potential revenue, but have also forced NVIDIA to navigate complex regulatory environments, strategic missteps, and missed opportunities. As NVIDIA navigates its current challenges, it's essential to understand how certain strategic decisions and missed opportunities have contributed to the company's struggles. This chapter delves into the strategic missteps that have weakened NVIDIA's position and explores how these decisions have impacted the company's growth trajectory. Strategic missteps. Over-reliance on core markets. Gaming market saturation. NVIDIA has historically relied heavily on the gaming market for its GPU sales. While this market has been a major revenue driver, its growth has begun to plateau. The company's over-reliance on gaming hardware has made it vulnerable to market saturation, where competition from AMD and economic slowdowns have compounded the challenge of maintaining growth. Data center dependence. NVIDIA's expansion into data centers was initially a strategic success, but it has become a double-edged sword. The company's heavy investment in AI and data center technologies means that any slowdown in these sectors, due to economic factors or shifts in technology adoption, can have a significant negative impact on its overall financial health. Delayed diversification. Slow entry into new markets. While NVIDIA has made strides in entering new markets such as automotive AI and professional visualization, its entry has been slower compared to its competitors. This slow diversification has limited its ability to cushion the impact of downturns in its core markets and has left it playing catch-up in rapidly growing sectors. Missed opportunities in mobile and cloud computing. NVIDIA's hesitance to aggressively pursue opportunities in mobile GPUs and cloud computing early on allowed competitors to establish strong footholds in these areas. The mobile GPU market, dominated by companies like Qualcomm, and the cloud computing market, led by companies like Amazon and Google, represent missed opportunities for NVIDIA to expand its influence. Challenges in product development. Product launch delays. Impact of semiconductor shortage. The global semiconductor shortage has not only affected NVIDIA's current product lines, but has also delayed the development and launch of new products. These delays have disrupted NVIDIA's product release cycles, leading to missed revenue targets and lost market share to competitors who were able to bring their products to market on time. Complexity in new technologies. As NVIDIA pushes the boundaries of technology with new architectures like Ampere and Hopper, the complexity of these new products has led to longer development times and production challenges. This has delayed the availability of cutting-edge GPUs, giving competitors the opportunity to capture market share. Pricing strategies and consumer backlash. High price points. NVIDIA's premium pricing strategy, particularly for its high-end GPUs, has been a double-edged sword. While it has maximized revenue from enthusiasts and professionals, it has also alienated budget-conscious consumers and led to criticism during periods of economic downturn. Competitors like AMD have capitalized on this by offering competitive performance at lower price points. Scalper and reseller issues. The scarcity of NVIDIA. GPUs, exacerbated by supply chain issues, has led to widespread scalping and resale at inflated prices. This has damaged NVIDIA's reputation among consumers who feel frustrated by the inability to purchase products at reasonable prices. The company's efforts to curb this issue have been met with limited success, further impacting brand loyalty. Technological and market shifts. Rise of competitors. AMD's technological leap. AMD's Radeon GPUs, particularly with the introduction of the RDNA and RDNA 2 architectures, have closed the performance gap with NVIDIA's offerings. This has eroded NVIDIA's dominance, particularly in the mid-range market, and forced the company to compete more aggressively on price and performance. Custom silicon and ARM's growing influence. The trend towards custom silicon, driven by companies like Apple with their M1 chips, and the growing influence of ARM architecture in various computing segments, presents a challenge for NVIDIA. While NVIDIA's attempted acquisition of ARM was a bold move to capitalize on this trend, the failure to secure the deal has left the company without a clear path to addressing this market shift. AI and machine learning paradigm shifts. Adoption of alternative hardware. As AI and machine learning continue to evolve, alternative hardware solutions such as TPUs, tensor processing units, developed by Google and other custom accelerators are gaining traction. These alternatives pose a direct threat to NVIDIA's GPUs in the AI space, forcing the company to innovate rapidly or risk losing its competitive edge. Open-source AI frameworks. The rise of open-source AI frameworks has democratized access to AI development, enabling more companies to develop their own AI hardware and software solutions. This trend challenges NVIDIA's position as the go-to provider of AI hardware and necessitates a shift in strategy to maintain relevance in a rapidly changing landscape. Economic pressures and external factors impacting NVIDIA. Beyond strategic missteps and technological shifts, NVIDIA faces significant external pressures that have contributed to its current struggles. This chapter explores the broader economic and external factors that are influencing NVIDIA's performance, from global economic conditions to regulatory challenges. Global economic challenges: inflation and rising costs, component and manufacturing costs. The global rise in inflation has driven up the costs of components, manufacturing, and logistics. As the prices for raw materials, semiconductors, and transportation increase, NVIDIA faces higher production costs. This has put pressure on the company's margins, forcing them to either absorb the costs or pass them on to consumers, which can further dampen demand. Labor costs and talent acquisition. The technology sector is experiencing a talent crunch, with increasing competition for skilled engineers and developers. NVIDIA has had to offer higher salaries and benefits to attract and retain top talent, further inflating its operating costs. This comes at a time when the company is also grappling with other economic pressures, making it a significant challenge. Consumer spending slowdown. Economic uncertainty. Economic uncertainty, driven by factors such as the pandemic, geopolitical tensions, and fluctuating markets, has led to a slowdown in consumer spending, particularly on non-essential items like gaming hardware. With fewer consumers willing to spend on high-end GPUs, NVIDIA has seen a decline in demand, particularly in the consumer segment. Shift in consumer priorities. As inflation and economic instability continue, consumers are prioritizing essential purchases over luxury or discretionary items. This shift has negatively impacted the sales of NVIDIA's higher-end products, as consumers are more cautious with their spending and are looking for cheaper alternatives. Regulatory and geopolitical pressures. Geopolitical tensions. U.S.-China trade war. The ongoing trade tensions between the U.S. and China have had a direct impact on NVIDIA. Tariffs on Chinese imports have increased the cost of components, while export restrictions have limited NVIDIA's ability to sell its products in one of the largest and fastest-growing markets in the world. These tensions have also introduced uncertainty into NVIDIA's supply chain, making it more difficult to plan and execute business strategies. Impact on global supply chains. Geopolitical tensions have disrupted global supply chains, particularly in the semiconductor industry. As a result, NVIDIA has faced challenges in sourcing materials, securing manufacturing capacity, and distributing its products globally. The company's reliance on international supply chains has made it vulnerable to these disruptions, further complicating its ability to meet market demand. Regulatory scrutiny. Antitrust concerns. As NVIDIA has grown in size and influence, it has attracted greater regulatory scrutiny, particularly in the areas of antitrust and competition law. The company's attempted acquisition of ARM, a key player in the semiconductor industry, was blocked by regulators due to concerns that it would stifle competition and innovation. This regulatory pushback has not only affected NVIDIA's growth strategy, but also its stock market valuation. Environmental and social governance, ESG pressures. NVIDIA, like many large tech companies, faces increasing pressure from investors and regulators to meet environmental, social, and governance, ESG standards. The company is expected to demonstrate its commitment to reducing its carbon footprint, improving labor practices, and ensuring ethical governance. While these initiatives are important for long-term sustainability, they also require significant investment and resources, which can impact short-term profitability. Supply chain and manufacturing challenges. Semiconductor supply chain crisis. Chip shortages. The global semiconductor shortage has severely impacted NVIDIA's ability to produce GPUs and other products. The shortage, driven by a combination of increased demand, natural disasters affecting production, and geopolitical factors, has created a bottleneck in NVIDIA's supply chain. This has led to delays in product launches, limited availability, and increased prices, all of which have hurt the company's bottom line. Dependence on foundries. NVIDIA relies on third-party foundries, such as TSMC, to manufacture its chips. These foundries have been operating at full capacity, making it difficult for NVIDIA to secure the production slots needed to meet demand. This dependency on external manufacturers has highlighted the risks associated with outsourcing critical components of the supply chain, particularly during times of crisis. Logistics and distribution issues. Global shipping disruptions. The pandemic and subsequent economic recovery have disrupted global shipping and logistics networks. Port closures, shipping container shortages, and increased freight costs have all contributed to delays and increased costs in getting NVIDIA's products to market. These disruptions have created challenges in meeting customer demand and maintaining a steady supply of products in key markets. Challenges in scaling production. As demand for NVIDIA's products continues to grow, the company has faced challenges in scaling its production capacity to meet this demand. This is particularly true for its newer products, which require more advanced manufacturing processes. The combination of supply chain disruptions, manufacturing constraints, and logistics issues has made it difficult for NVIDIA to achieve the scale needed to fully capitalize on market opportunities. Market reactions and investor sentiment. Stock market volatility. Impact of economic factors. NVIDIA's stock has been highly sensitive to broader economic factors, including inflation, interest rates, and global market trends. As these factors have fluctuated, so too has NVIDIA's stock price, creating volatility that has made it difficult for the company to plan long-term investments and strategic initiatives. Investor concerns. Investors have grown increasingly concerned about NVIDIA's ability to navigate the current economic and competitive landscape. These concerns have been reflected in the company's stock performance, with periods of significant decline as investors react to negative news, earnings misses, or broader market downturns. Market sentiment. Perception of strategic decisions. The market's perception of NVIDIA's strategic decisions, particularly in relation to its failed acquisition of ARM and its pricing strategies, has been mixed. While some investors appreciate the company's bold moves and long-term vision, others are concerned about the risks and potential downsides of these decisions, leading to a divided sentiment among shareholders. Future growth prospects. Despite the challenges, many investors remain optimistic about NVIDIA's long-term growth prospects, particularly in emerging markets like AI, autonomous vehicles, and the metaverse. However, the company's ability to execute on these opportunities amidst the current economic and competitive pressures will be crucial in determining its future success. Navigating the future, NVIDIA's path to recovery. As NVIDIA confronts the challenges and pressures that have impacted its performance, the company must also look ahead and strategize for the future. This final chapter explores the potential paths NVIDIA can take to recover and thrive, despite the obstacles it currently faces. Strategic repositioning. Diversification into emerging markets. Autonomous vehicles and AI. NVIDIA has already made significant inroads into the autonomous vehicle and AI markets. To ensure long-term growth, the company must continue to innovate and strengthen its position in these areas. This involves not only advancing its technology, but also forming strategic partnerships with leading companies in these industries to ensure widespread adoption of its solutions. Metaverse and virtual reality. The rise of the metaverse and virtual reality presents a new frontier for NVIDIA. By positioning itself as a key player in developing the hardware and software infrastructure for these emerging platforms, NVIDIA can tap into new revenue streams and reduce its dependence on traditional markets like gaming and data centers. Enhancing supply chain resilience. Investing in in-house manufacturing. To mitigate the risks associated with supply chain disruptions, NVIDIA could explore the possibility of investing in its own manufacturing capabilities or forging closer partnerships with key suppliers. By gaining more control over its production processes, NVIDIA can better manage supply chain risks and ensure a more reliable flow of products to market. Sustainable sourcing and operations. As part of its commitment to ESG standards, NVIDIA should continue to focus on sustainable sourcing of materials and environmentally friendly manufacturing practices. This will not only help the company meet regulatory requirements, but also enhance its brand reputation and appeal to socially conscious investors and consumers. Technological innovation and leadership. Pioneering next-generation GPUs. R&D investment. To maintain its leadership in the GPU market, NVIDIA must continue to invest heavily in research and development. This includes exploring new architectures, improving energy efficiency, and pushing the boundaries of performance. By staying ahead of the competition, NVIDIA can retain its position as the go-to provider for high-performance computing solutions. Expanding into quantum computing. As quantum computing emerges as a revolutionary technology, NVIDIA has the opportunity to leverage its expertise in parallel computing and GPUs to play a significant role in this new field. By investing in quantum computing research and developing hardware that complements quantum systems, NVIDIA can position itself as a leader in the next wave of computing innovation. AI and machine learning dominance. AI software ecosystem. Beyond hardware, NVIDIA can strengthen its position in AI by expanding its software ecosystem. This includes developing new AI frameworks, tools, and platforms that make it easier for developers to create AI applications using NVIDIA hardware. By building a robust software ecosystem, NVIDIA can create a network effect that drives demand for its products. Ethical AI and responsible innovation. As AI becomes more pervasive, there is growing concern about the ethical implications of AI technologies. NVIDIA has the opportunity to lead the industry in promoting ethical AI practices and responsible innovation. By prioritizing transparency, fairness, and inclusivity in its AI initiatives, NVIDIA can build trust with consumers, regulators, and partners, regaining market trust and investor confidence. Transparent communication. Engaging with investors. NVIDIA must prioritize transparent and consistent communication with its investors. By clearly articulating its strategy, addressing concerns, and providing regular updates on progress, the company can rebuild investor confidence and reduce market volatility. Consumer engagement. In addition to investors, NVIDIA should focus on engaging with its consumer base. This includes listening to feedback, addressing concerns, and building stronger relationships with its customers. By fostering a loyal and satisfied customer base, NVIDIA can create a foundation of support that will be crucial during challenging times. Executing strategic acquisitions. Targeted acquisitions. To accelerate its growth in key areas, NVIDIA could pursue strategic acquisitions of companies that complement its existing capabilities or provide access to new markets. These acquisitions should be carefully chosen to align with NVIDIA's long-term vision and should be executed in a way that maximizes synergies and minimizes integration challenges. Building strategic partnerships. Beyond acquisitions, NVIDIA should seek to build strategic partnerships with other leading technology companies. These partnerships can provide access to new technologies, markets, and resources, helping NVIDIA to stay competitive and innovative. Looking ahead, a path to sustainable growth. NVIDIA's future success will depend on its ability to navigate the challenges of today while positioning itself for the opportunities of tomorrow. By diversifying its markets, investing in cutting-edge technologies, and maintaining strong relationships with investors, consumers, and partners, NVIDIA can chart a path to sustainable growth and long-term success. Thank you for watching. If you found this video informative, don't forget to hit the like button and subscribe to our channel for more in-depth insights into the tech industry and financial markets. Stay tuned for our next video.